Recording. All right, everybody. Hi, my name is Amy. I'm so excited for today. We're talking about how to build wealth as a business owner. My name, again, is Amy, and I am a financial broker working currently out of Victoria, technically Langford, and my office is here, and working remotely. I can actually serve families and business owners across a few provinces in Canada. And then I have an amazing co-host or guest with me today, Ashley. Ashley is a tax specialist, a CPA accountant for about the last 10 years, I believe. Ashley, do you want to just say hello and introduce yourself briefly?
Sure. Hi, everyone. Thank you, Amy, for having me. So I'm Ashley Brown. I work at a mid-sized accounting firm here in Victoria, so MNP. I'm a senior tax manager, and I help small business owners really maximize growth of their business, maximize tax efficiency, what have you. I've been in the business for about 10 years, and I feel like I'm constantly learning. So happy to be here and talk about tax today.
Amazing. Yay. And fun fact is that Ashley and I met quite a few years ago and kind of were roommates for a brief moment in time and then recently reconnected. So excited to, really excited to have you, Ashley, especially because, well, you're very knowledgeable, lots of experience in your field, also a mama. And I think a lot of people on here are moms. Or women, and we just see the financial industry is still very dominated by men. So it's nice to have a female accountant. I just have to say that. So, and everyone who's joining or listening to the recording, I am super excited to talk about this because I have been a business owner for quite a while and not in the same business that whole time. I'll share a little bit about my story throughout this. But it's really an area for me that I feel like I'm so passionate about it. My parents kind of did some of the self-employed stuff when I was growing up, but it never really felt like they were that abundant. There was always financial stress. There was always, obstacles and challenges and things. And going to public school, kind of going through the steps and the motions as what we're all sort of told to do, I still felt like there wasn't really a lot of financial education. And so I think what happens a lot of times with business owners or self-employed people is that we get excited about a career, we get excited about, something that we're going to do for the world. And in some cases that means starting our own business. But a lot of times there's some knowledge that you have about your field, whether you're a massage therapist or whether my husband's a chiropractor, or maybe you've started a small, a clothing company or a bakery or a cafe or whatever it might be. You have your knowledge and expertise about whatever business you're in, but you don't always come to it from a place of like a financial foundation. And so that's really where we're coming in today, wanting to share financial strategies, some of this knowledge that you just don't really necessarily get as a business owner, and you have to kind of muddle your way through. So the topics today that we're going to cover are 3 essential keys to success as a business owner, financial success. We're going to talk about how to plan for the future, even if your income is unpredictable, how to actually build wealth, use your business income to build wealth. And then we're going to wrap things up at the end, thinking and talking a little bit about, is incorporation the right step for your business? Is that a direction that you want to go? And what questions do you need to ask yourself to know if it's the right time to incorporate? This is kind of funny, but I'm sure a lot of us have heard that there's not a huge, or there are a lot of hurdles when you start a business. I'm curious in the chat, how many people could guess what percentage of businesses survive their first year? Like how many businesses, if you started a business 1 year from now, are still going? Any guesses? 20%? Amazing. Okay, 50%. Amazing. Any other guesses? So it's interesting, actually, the first year, about 80% of businesses survive. These are stats from Canada, by the way. So about 80% of businesses survive the first year. But when you look at 5 years down the line, it's only about 50%. And if you look at 10 years down the line, it's only about a third, so 33%. Right. And so, yeah, Carolyn says 3 to 5 years to survive. That's so accurate. So like really the first year, you're like, what the heck am I doing? How do I survive? What's going on? After you kind of get in, you're 2 years in, you're 3 years in, you're 4 years in, 5 years in, then it starts to really click and you're like, okay, I got this. Things are happening. Things are working. You're learning as you go. Right. And so I'm curious too, in the chat for anyone who's on here live, how many years are you in business? Like, have you been at this for a while? Are you brand new? Let us know. I know there's some people in here who are newly licensed agents with our firm, our agency. And so even if you are getting a financial license with us and then you've still got your full-time job or career or whatever, technically you're a business owner, but you might be brand new. Okay, so we have 2 years, 1 year, going into year 4. Amazing. I'm just about done my 2nd year in my current business. So we have 1.5 years. Amazing. Okay, so hopefully this is part of the puzzle and talking to different financial professionals along the way. This is part of the journey of being one of those businesses that actually survives, right? And we're going to talk about a few things related to what does it actually take to start a business and grow a business. And the other question that I like to think about is like, why did we start our businesses? I know when I was in my early 20s, I really wanted to have my own business because I just wanted freedom. I just wanted to be in control of my time. I wanted to be able to decide, I'm a hard worker. Certainly don't shy away from hard work, but I want to pick and choose when I work and what I work on and how I work. And sometimes I'm the most productive, let's say on a Saturday night, or sometimes I'm the most productive, on a Tuesday midday. I don't necessarily want to fall into that 9 to 5, Monday to Friday schedule. And so that to me was part of the reason why I wanted to start a business. I also wanted to build something that I could, that could go beyond my lifetime, right? Like we can talk about the word legacy, we can talk about impact, we can talk about, future generations. I'm a mom, Ashley's a mom too. And so we do have the opportunity when we build a business to build something that can go beyond us. In my first business, I didn't realize, but I was actually, I have these 2 pictures of the car on here, because the other question that we need to ask ourselves, and this can be a little bit of a tough love scenario, but I put quite a lot of time, quite a lot of years into a business that didn't end up giving me what I wanted. And I kind of wish someone had been tough love with me in the beginning and been like, does it really have the horsepower to give you what you want? And that's why I have like the little Pinto car on the left and then the fast car on the right, because as I go through some of the information today, I want you guys to be honest with yourself. Is the business you're building, is it something that can actually give you what you want out of your life? Or is it something that you just feel like you have a loyalty to because you've been doing it for a while, or something that I was very loyal to what I was doing before, to the point that I actually probably went far beyond the point of how much time and money I should have invested into that business. So I am hopeful that through some of the failures that I've gone through personally, I can help others not go through those and not, waste so much time. So I hope that the business you're building right now feels like aligned. It feels like, limitless, like you can take it where you want it to go. And so, yeah, that's a good question. I ask myself this every day, Risa. So, okay. So the idea here is let's talk about how to, I'm not a business coach. Sometimes people think that I am, but I am not. And I have great business coaches I can refer you to if that's something that you're working on, which is growing your business. But really the conversation today is how do we take our business, which is providing cash flow, and then how do we grow wealth out of that cash flow? And so what it is it's really thinking about the money that we're making in our business. How can we allocate some of that? How can we take some of that money and put it into some different vehicles and some places where it can grow and it can actually become a financial support to us above and beyond or aside, parallel to our business? Because I know that something that I've experienced in my years of building businesses prior is I kept thinking, okay, I'll think about my future later. I'll think about saving money later. Right now, I just have to figure out how to grow my business, blah, 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 day to day. And the challenge with that is that if something happens and your business goes away, you don't really have a safety net, right? So what we want to do is we want to build a solid financial foundation, which includes a successful cash flowing business and also includes other assets and other sources of financial support. And there's a lot more to talk about there. We'll get into it. The other thing that's important to understand is that there's a lot of different levels of being in business. So we can be a self-employed person where it's literally us. Like we are the only person that works in our business. We deliver a service or a product. And if it wasn't for us doing the thing that we do, nothing would happen, right? We would just simply be, there would be no business. And then there is the business owner kind of category where you grow beyond, your business grows beyond just you. So no longer is it just you running the show, but now you have employees or contractors, and you start to expand and scale your business to a place where you actually maybe cannot show up one day and things will still happen. So how many people in this room would call themselves would consider yourself a small, like a self-employed? So put an S in the chat if you're like, it's just me, I'm the one. And then how many people, I'm not sure if that was an accident, but we have an X in the chat. And then how many people would consider yourself a business owner? Like you actually have employees or staff, you've kind of gone a bit above and beyond that. Okay, so we have a bunch of S's. Yeah, quite a lot of S's. I was kind of expecting that, but I wasn't sure. Like if there's anyone on here that has, say, I don't know, 5 employees, 10 employees, let me know. Yeah, a couple part-time helpers, amazing. And so, and one contractor, yeah, very part-time contractors. Yeah, exactly. So there's big differences here. And when we get into the conversation at the end about incorporating, then we're starting to think about a much bigger, business, more revenues coming in. You're thinking about incorporating, you probably have employees at that point. So it sounds like we're really talking to a lot of self-employed people, which is kind of exactly what I thought. So the 3 keys to financial success. This is kind of, I'm pulling this from my own experience. I'm pulling this from various books that I've read, a bunch of different, there's a lot of different resources that I've come across in my own personal journey, as well as in the profession of financial services. So the first key is cash flow. I think if you are in business, you know that money needs to be coming in order for everything to work. And if there's no money coming in, or if the money that's coming in isn't enough, then obviously it feels very stressful and it doesn't feel like you can really grow or do the things that you want to do. One thing that I don't think that a lot of business owners do is reverse engineer. And what I mean by this is we might start a business. I'll just take, for example, a massage therapist. I was talking to someone yesterday who's a massage therapist. You become a massage therapist, you like helping people, you're good at it, you get your credentials, whatever, you start your business. But have you ever reverse engineered, how much money can I make? Does that actually meet the goals, the financial goals that I have for myself? And just to give you an example, for a massage therapist, let's say you can charge, you can probably charge $120 an hour or whatever for seeing patients, but let's say it's $100 just for easy math. And then let's say that you can see 5 patients a day and still maintain your sanity and your well-being. If you see 6, 7, 8 patients a day, you're going to burn out real quick. So let's say you can see 5 patients a day and you can do that 4 days a week. And if you do 5 days a week, oh my gosh, you're really toast and you're burning out. But let's say 4 days a week, 5 patients. So that's 20 patients a week, kind of at your max capacity. And that's, what is that per hour? Anyone good at math? 20 times 100, 2,000. Am I right? Yeah. So then 2,000 times 4 weeks is 8,000, right? So let's just say you're a successful massage therapist, you're busy, you can see 20 patients a week, you can make about $8,000 a month. But let's say that your financial goal for the lifestyle that you want to live is $10,000 a month. There's a problem there, right? Like you can't physically see more people, otherwise you'll burn out, but blah, blah, blah. So cash flow, there's going to be a few things to think about here, but what I think that a lot of business owners do is they don't ever reverse engineer and say, can I make as much money doing this as I want to make? And what does that look like? How many clients do I need to have? Or how many sales do I need to have? Or how many, whatever it is that you sell or you offer or whatever. Running those numbers from the back end and saying, okay, if I want or need a certain amount of income per month, can my business actually provide that? Is that physically possible? Is this resonating for anyone, or is it like, ooh, I've never really thought about it that way? Never went backwards. Tony Robbins has a great exercise, which is that you design your lifestyle and you figure out how much that lifestyle is going to cost. And then okay, I need to figure out a way to earn whatever it is, $10,000 a month, $20,000 a month, whatever that number is for you, right? And are they after-tax dollars? Great point, Cheryl. Totally relevant question, right? $8,000 is not a take-home income for that RMT. They are going to have to pay tax. They also have expenses. They also have, lots of things that they need to be deducted off that $8,000. So are they living on $8,000? Definitely not, right? Okay. So other factors relating to cash flow. Does your business have a cash flow system? Okay. And the number one thing that I see, and I did this incorrectly for years, because as a sole proprietor, you technically, your money, your business's money, kind of it's all lumped together, right? And so I would have my one checking account. I had my paycheck coming in there. I had my business income coming in there. I had business expenses coming out there. It was like a total mess. I didn't know how much was income from business, how much was personal income, what are my business expenses? Every year at tax time, it was like, I was stressed to the max for like many weeks, being like, oh my God, what a mess. Why didn't I do something about this earlier? I didn't have Ashley in my life. No. Yeah. And so I think that even, technically you don't have to separate it, but I think it's really, really smart to separate your business finances from your personal, making sure that you have a separate bank account where income comes in for your business, where you can document and track the expenses specifically related to your business. And then a separate credit card for business. So you can actually, pull a statement and say, okay, everything on this credit card is related to my business. And then you've got your personal credit card, you got your personal bank account. You can move money from your business account to your personal account. Hopefully you do that, I don't know, every 2 weeks or once a month or whatever makes sense for you. And Ashley's going to talk more about that in a sec, about business expenses. And the second part of this is to consider something like a profit first approach. And Ashley, is this a book that you've come across or read, or no? So it's kind of a newer, I think it's been out for a couple of years, but it's an approach where what most businesses do is we've got our income, and then we just try to make sure all of our expenses are paid. And then we hopefully have something left over to pay ourselves. The profit first approach is where you pay yourself first, and you make sure that your personal payment and your profit for your business is like the top of the pile. And then you try to pay your expenses with what's left over. And so it allows you, or forces you as a business owner, to really focus on not just letting all the money go to expenses, because that can be a really, tricky trap that we end up in. So if you haven't picked up this book, it is amazing. It's a very good system to implement as far as managing your cash flow. The other thing, as I mentioned, is knowing exactly how much your business needs to earn in order to cover your expenses. And there's probably some costs in your business that are fixed, that are the same every month. And then there's probably some costs that are variable. These are things that, this month I went out and, did so many lunches with clients or whatever. And that number would probably change month over month. You might also have some annual costs that you kind of need to think about. For myself and others that are agents on here, it's like our license renewal, some of our our annual dues that come up once a year. So do you have a good sense of how much you need to make in your business just to cover those bare bones of expenses? What is your break even point? We got some people joining late here. And then we also need to know what are legitimate business expenses. So I'm going to pass it over to you, Ashley, for a few minutes to share on this topic, because this is definitely your wheelhouse. So feel free. Yeah, you're off mute. Okay.
Okay, great. Thank you, Amy. I'll try not to talk too fast. I have to say, I do get really excited about tax, and then I tend to talk super fast, and it's complicated stuff. So I'll try and just slow it down a little bit. So I think, speaking from an accountant's perspective, a lot of the time when we get new business owners in as new clients, employed, there's this kind of misconception around what they can deduct as a self-employed individual versus what can they deduct if they were to incorporate. A lot of times clients will come to me and say, Ashley, I need to incorporate my business because I'm going to be able to deduct so many more expenses if I set this up in a corporation. And so I just want to break that misconception down a little bit in terms of what our tax rules actually are. And so our Income Tax Act does not discriminate against whether you're a self-employed individual versus whether you're an incorporated company. So there's sort of the tax rules look at it depending on what kind of income you're earning will dictate the kind of expenses that you're able to deduct. So business and property income kind of falls into one bucket. Employment income falls into another bucket. So that's your T4 income that you're getting that I get from MNP. That's only eligible for sort of certain deductions. And then there's some other rules that are applicable to salaried employees also earning commission, and some different expenses that can be deducted there. But for the purpose of this discussion, let's just focus on those business and property expenses, because they are going to be the same whether you are incorporated or whether you are a self-employed individual. No difference. It's business income nonetheless. So some of the things that we can deduct, Amy's got a really good list up here on the screen. From a tax rules perspective, there's one provision in our tax act, and it says you can deduct basically anything you want to the extent that you are incurring this expense for the purpose of earning business income or property income. And so that's the rule. And so at the end, we say other subject to 18(1)(a). That's that sort of general expense limitation. So I should say there are certain expenses that are specifically non-deductible, but there's a whole bunch of gray area. And so really depending on what your business looks like, we work within those parameters, and we try to kind of minimize tax that you're paying. So from my perspective, minimize tax that you're paying right now every year annually through your business, and then minimize the tax that you're paying eventually, whether it be in your estate, on transfer of a business to your children, on sale to a third party, and things like that. So let's just kind of look at a couple of these different expenses. There's lots of stuff as a self-employed individual that you're able to deduct. So they're all right up there on the screen. I guess a couple of noteworthy mentionable things. Let's talk about business use of home expenses. I think a lot of us work from home these days, and so those are something that we definitely don't want to miss out on. In the business context, it's really, if you're earning business income and using a portion of your home, well, it's proportionate use of your home as it relates to your business. There's legal and accounting, interest to the extent that we can. That's one thing I always try to make sure my clients are doing, is maximizing interest deductibility. So what does that mean? It just means paying off personal debt that you're not able to use that interest deduction against business income, and then maybe leveraging some of your business assets so that you get that tax sort of strategy achieved. So lots of different things. Motor vehicle expenses, I think, are worth talking about because these are super subject to audit by CRA. So absolutely you're allowed to deduct motor vehicle expenses that relate to your business. Very important to keep a vehicle log, very important to make sure that you're keeping receipts and things like that. And you want to make sure you're keeping good track of a lot of this stuff. So a lot of my clients, I give them an Excel spreadsheet and I say, hey, while you're working at the things that you're doing really well, your business, keep track of things that you're doing for a lot of different reasons. So Amy just talked a lot about budgeting. I think that's a really important piece of running a business. And so you never want to kind of get to the end of the year and you have no idea how your business is done. How much money did I make? What did I pay in expenses? And then of course you get hit with this big tax bill, and hopefully you kind of have some idea of what that looks like. But it's just really optimizing the various expenses that are available to you. So I just wanted to unpack that because I think that is a really common misconception between an incorporated versus an unincorporated business owner.
That's so critical to mention that. And that's such a good point that, yeah, you don't necessarily get a bunch of extra bonus deductions just when you incorporate. But we'll talk about that at the end, the big difference about incorporating versus being a sole proprietor, really, as it comes to tax. There is a question in the chat about meals and entertainment. Can you speak a little bit more about that?
Absolutely. So meals and entertainment, there's a generally those are 50% deductible. So those are kind of the meals and entertainment. They're meals and entertainment incurred for the purpose of running your business. They're not, hey, we took the kids out for dinner last night, and so now we're going to run this expense through our business. Certainly not that, but of course you're probably entertaining clients, you're going for lunches, you're connecting with people, and so those meals and entertainment you can deduct. It's almost like an advertising expense, I would call it, but there's a limitation on them. So you're only able to deduct 50% of your meals and entertainment that you incur. And there's some GST considerations there as well. If you're a GST registrant, you have a cap on your input tax credit as it relates to that meal. So and I hope I answered the question there.
Yeah, and another good chat question here is relating to, if your business is not yet generating income, does it still qualify for business expenses being deducted?
That's a really good question. And so our tax rules say that if you have a reasonable expectation of profit, then absolutely those business expenses are deductible. I mean, a lot of the time we're in a startup phase for the first couple of years. And so generally we're turning up a loss for maybe 1 or 2 years before we actually turn a profit. So as long as you have that reasonable expectation that your company will be, or your business will be profitable, then yes, those are deductible expenses.
Yeah. And that was certainly my experience in the beginning of, I had a full-time job, I had my T4 income, and then I was starting a business on the side, which is what most people do, right? You need to pay your bills while you build your business. But I would, there was some income, but like little bit at the beginning, just a little bit, but then lots of expenses, because that's the nature of starting a business. And, you know, if you go and open a restaurant, you're like, you know, multiple hundreds of thousands in the hole before like a single dollar comes in usually, right? So yeah, there's definitely some, yeah, well, you're the expert, but like legitimate expenses relating to trying to make income.
Absolutely. And so I think if you're in a situation where you have self-employment income of negative $30,000 every single year for 6 years, I mean, at what point do you reasonably expect that business is going to turn a profit? So I think it's just kind of applying your own reasonability also.
Yeah, of course, right? Yeah, how many years can you really show a loss without, yeah, the question starting to be raised. Okay, and there's also a question about if reporting a loss, can't claim the home expenses. And so, yeah, I believe those carry forward, right? Home office expenses.
Yeah, and you know what? I think I would I'd probably lean on one of my folks that are just way more involved in this sort of T1 reporting world. License dues. I'm not actually sure that that's the case. I could certainly put that into the parking lot and provide a follow-up after our session.
Yeah, this is, I mean, yeah, again, the tax codes are changing so often, like I don't even know how people keep up, but like this is what I had heard from an accountant a few years back was there's your business expenses, but your home office expenses were like, you deduct those later on. And so if you didn't have any business income for the home office expenses to go against, those would carry forward. Anyway, we can circle back to that, make sure that answer is clear. Okay, we want to move on because there's a few other juicy topics to cover, but that was amazing, Ashley. There's definitely, you know, anyone in here who hasn't yet worked with an accountant, like that's obviously a great next step to take when you're starting to realize, okay, I know I'm making some money, and also I don't know if I'm optimizing, you know, all the things that I could be deducting or the way in which I'm reporting all this. So definitely a good opportunity to connect with someone like yourself, Ashley, and get those questions answered for a specific business situation. Okay, amazing. Thanks for the questions, you guys. I love the engagement. So we're still in the cash flow, you know, topic here. And so I believe that there's 3 numbers that you really need to know. And the first one that I mentioned was your business expenses, right? How much does your business need to earn to become profitable? And so compared to how I did my business the first time around, this time around, I'm doing exactly what Ashley said. I have a spreadsheet so I can track all things every month. And I know that my fixed costs are around, for me, it's actually like almost $2,500 because I have an office rent and there's some things, right? And so I need to actually make more than that to even pay myself anything. And so you need to know your expenses. What is your bare, you know, bottom of the barrel that you need to make in your business to be profitable? And then you need to know how much do you want to earn personally in order to enjoy your ideal lifestyle? And there's often in financial planning, you'll see a lot of pie charts. Will be like, okay, how much is going to your household? Like, how much is your living expenses? How much is going to, debt or savings or, taxes, giving, these different categories. I've circled taxes because it's obviously a fairly important thing to be aware of. I've heard stories of people who have started businesses, or they've even just shifted from maybe being an employee to being a contractor. And so all of a sudden now there's no tax being deducted on their income. And then they get really hit with a shocker of a tax bill after doing that for a period of time. And so, speaking to someone like yourself, Ashley, or even going on and Googling like a tax calculator and saying, okay, as a contractor, I'm earning $80,000 a year. How much of that is how much tax am I going to owe? And there are these, you can put a tax calculator into Google, you can say which province you're in, and it'll give you an approximation, like I think it was like 30 to 40, it's 30 to 40% generally in that income threshold, right? So at least you have a basic, a good sense of like, okay, every single dollar that's coming in after expenses, right? Because this is how it works with your own self-employed income is income minus expenses, pay tax on what's left over. And that is the key difference between being an employee and being a self-employed person, is that an employee, your tax comes right off the top. Self-employed, you do have, as long as they're those legitimate business expenses, you have the ability to deduct those from your income before you pay tax on what's left over. We could go into like multiple hours of these topics because there's so much to talk about. Like, okay, should you write off as many things as you possibly can, or should you not? Because I think Stephanie's on here and she's a mortgage broker. And of course, if you're trying to qualify for a mortgage, you need to have higher income on paper. So lots of different strategies, lots of different things to consider as far as how we tackle this. But I personally believe you need to know how much you need to make for your expenses. You need to know how much you need to live on. What are your living costs? And then the third number to know is how much do you need to be saving for the future? How much do you need to actually allocate to retirement? I had this question actually come in before the class, someone who registered, but she's not able to be here live. She was like, I really would love if you could answer this question. And she said, I've heard that I should be saving 20 to 30% of my income for retirement, but I don't know if that's net or gross or whatever, what that number is. And I thought that was a really interesting question, because how do we come up with 20 to 30% of our income? Like, where does that come from? What we need to do when we're planning for retirement is we actually need to figure out, well, what sources of income will we have in our retirement years? And then what is the discrepancy or the shortfall, if there is some? If you have a full-time job and a pension, maybe your pension is like a very good amount that you feel comfortable that you're going to be able to live on in retirement. But the vast majority of Canadians don't have a pension. And so what do we have? Well, CPP and OAS. And does anyone want to guess how much the average CPP payment is? You can put it in the chat. Average. I'll also share what the maximum is. Oh, that is $600 is actually very close, Reese. 800, yeah. So I believe the average number, I actually have it in a different tab. I believe it was about 700, give or take, average. And then the maximum for CPP is about 1,300. Okay, so you work your whole life, you pay into CPP, and the max that people are receiving as of 2023, we have no idea what the future holds, but as of 2023, the maximum CPP is about 1,300. And then you can add on OAS, old age security, and the amount that you qualify for. There's some factors, it varies a little bit. But let's just say you were maybe approaching $2,000 a month. How many people on here could live on $2,000 a month? Just curious. Anybody? No, not too many people. So super, super, super important to think about the future and think about what other sources of income can you build in your working years that are going to help to support you in your retirement. My husband is teaching our son how to play golf, so I'm hoping he becomes a pro golfer. That'll help us in our retirement. Just kidding. He's out there. He's like almost 3, and Maddie's teaching him his golf swing. It's awesome. Okay. And I also mentioned on here sale of a business, right? Like next week, we're going to do another class. We're going to be talking a little bit more about incorporated businesses and legacy and things like that. But is the business that you're building something that you could sell one day? Is it something that could you could pass along, or there could be some arrangement where you're not actively working in the business anymore, but it brings in some income for you. And so what we do in our financial education sessions, and when I am sitting down one-on-one with someone, is we help you calculate your FIN number, which is your financial independence number. And so it's talking about, okay, how much money do you need in retirement? What are your sources of income? And then what's the shortfall? And how much do you need to be saving today, now, every single, month after month, saving, investing, getting that money working for you in order to get to retirement and actually have enough money to live comfortably. The third key here is assembling your financial team, or your team in general. So I believe that there's at least 3 professionals that you kind of want to have in your back pocket, that you want to be, sourcing and finding the people that you want to work with. I think for sure you need an accountant. Maybe in the first couple of years you can muddle your way through and, file your own taxes. Certainly I have done that in the past. And then you get to a certain point where you're like, nope, I need to up level and I need a professional to help me with this. And so getting an accountant that you like, incredibly important. In some cases, you need a lawyer, and that's like, if you have specific legal concerns related to your business, if you have contracts, if you are incorporating, or you're setting up a structure, maybe you have a business partner and you need different partnership agreements and things like that, for sure, you're going to need a lawyer. And then I believe also, maybe I'm biased, but you need a financial advisor, or someone that can fill that role of, insurance broker, financial advisor, someone that can apply some financial strategy and fill in those pieces relating to, how you're planning for retirement, and also how you're protecting yourself now. Above and beyond these professionals, depending on what industry you're in, there's probably going to be other people that you need. And, as you grow and scale your business, maybe you're outsourcing some of the tasks that you don't love to do, or that you don't thrive in. And that's going to allow you to focus in on the things that you do love to do. The third key, and I am going fast, sorry, I apologize. I knew that I packed too much stuff into this. I was like, there's going to be too many things to share. And oh my gosh, I should make this a 3-part series. But the third financial key is protection. And why is this super important? Because you are your greatest asset. If you are, especially if you're solopreneur, self-employed, you're the one, the cogs don't turn if you're not the one there turning them, then you need to make sure that you are protecting yourself, because we never know what the future holds. We never know what is around the corner. And there are 3 main categories of insurance. There is life insurance, protecting your life, especially if you are a self-employed person and you have a family, and maybe you're the main breadwinner. My husband was, for a period of time, was the main breadwinner for us, running a very successful business. But if he, kicked the bucket, there, like, literally $0 would be coming into that business. So we needed to make sure that we had the right kind of life insurance protection. We also have things like critical illness, which is going to cover you for a serious illness like cancer, heart attack, stroke, MS, like some of these big things that you can be diagnosed with. And, I'm surprised every day at the stories that I hear about young, healthy people dealing with critical illnesses, dealing with like significant, an illness that like really impacts your ability to, I'm just going to mute somebody here, completely impacts your ability to earn income. And with critical illness, I often say, let's think about like, what is your kind of average annual income, and make sure that you have a policy that protects you for that amount, so that if you couldn't work for an entire year, you would have that income paid out to you in a lump sum tax-free amount. And then you can get back on your feet, right? You can undergo whatever treatments you need. You can seek out holistic healthcare if that's what you want, like whatever it is that you need to do to get back on your feet. And then disability insurance protects your income. So unlike critical illness is completely based upon a diagnosis of a health condition. It doesn't matter if you can still work or you can't work. They don't care about that. They just, if you're diagnosed, you get the payout. Disability is based on if you can't work. So you could maybe have an injury, be in a car accident. It could also be an illness, but it's basically precluded on you not being able to work. And then you're going to receive a monthly payout, a tax-free monthly payout, which is usually a percentage, 60 to 70% of your income that you would otherwise be earning. So self-employed for sure you want to sit down. This is something that I can help with, or there's a few other licensed agents on the call here that can help with insurance. And we want to make sure that we're choosing the right types of coverage for your situation. So definitely something that's worth a further conversation. I'm just going to check the chat. Oh, no, I don't think there are any current. Oh yeah, just CPP. Okay. Next, this is a topic I hear all the time when I'm sitting down one-on-one with people. It's like, how do I plan for the future? How can I save for retirement when I literally have no idea how much money I'm making every month? And I would kind of throw it back to you and say, you know, you need to know your numbers. You need to track these things. And then I'm going to guess that if you actually tracked things for, say, 6 months, a year, you would be surprised how potentially consistent it actually is. Like, it might feel like it's, you know, it's up, it's down, it's this and that. But I know just tracking my own numbers over the last 2 years, I like the first year when I average it out, I'm like, okay, that's about how much I earn per month. This year when I average out, I'm like, yeah, okay, that's about how much I earn each month. And I'm growing and scaling. So it's going up, which is nice to go in that direction. But, you know, I just don't want this to be an excuse or something that prevents you from starting now, because even if you're only starting by, let's say, saving, I don't know, $50 a month for your future, you're going to build the habits. You're going to start to build the structure that will serve you really well when you are making a lot more money, which hopefully you are in the future with your business. So, you know, I always used to tell myself, like, okay, well, when I'm making more money, I'll figure out what to do with it. I'll figure out where to put it. I'll figure out how to invest it. I'll, you know, all these things. I'll do that when I'm making more money. Well, you're not going to just magically know how to do all of that stuff or have that all set up when you all of a sudden hit a certain income threshold. It's something that you can start wherever you're at, you can start with, and you can build upon, you know, whatever it is that you're starting with. And the final, the main topic here too is to understand, like, when we talk about building wealth, like, okay, what does that mean? I think that I heard this, I learned this on like some video years ago, but it stuck with me. And I feel like it is a lesson that we all need to learn, is what the wealthy people do differently than the people who we would call the middle class, or the people that just kind of keep going, okay, I just got to keep working, just got to keep working, just got to keep working. And that is that the middle class, we tend to buy things that are actually, we think of them as assets, but they're actually liabilities. And from an accounting perspective, Ashley will probably be like, okay, so a boat is technically considered an asset. An RV maybe is technically considered an asset. It has value. But the problem with these things is that they depreciate. So they don't actually gain value over time. They go down in value. And so what we have a tendency to do in our society and culture is, the more money we earn, the more we spend, and we spend money on things that end up losing value over time. And that's why we're just never going to get ahead. And so what we have to start doing is shifting our mindset into any extra money that we can earn in our business above and beyond our expenses and our living costs and all of that. How can we use that money to invest in, to buy, or to build assets? And in my definition of assets here, we're talking about things that actually will pay you, or they will increase in value over time. That's a question, Branka. I'm not sure. We'll try to see if we have time for that later. So I hope that this is resonating. Are you guys following me with this as far as like assets versus liabilities? Liabilities cost you more money. Like, let's say you buy a boat, great. You put a down payment on your boat, but now you have a monthly financing bill, an extra $500,000 a month, whatever it is. You have this thing that has value, but it's costing you money. There's probably interest on top of that. Over time, you're going to spend more money on that asset than what it's actually worth. And it's not going to be worth anything, or it's going to be worth less in the future, right? Okay, so how can we build assets? How can we buy or invest or start to build assets in our life? Well, again, there's a little bit of a hierarchy here. And in my opinion, there's different types of assets that we can buy, build, or invest in over our lifetime. So let's just think about, this is actually something I got from Mel Abraham. I think this is a really powerful way to conceptualize different types of income. So most of us have active income. This is income we're earning, like our day-to-day. It's our self-employed income, or it's our T4, like our employee income. When you graduate from that and you actually are starting to build a business where you have employees or contractors, you're scaling, you're growing, then you start to have this business income, which is a little bit more passive in the sense of like, it's not 100% on your shoulders to be actively earning that income, then we can start to think about asset-based income. Okay, so we're talking about like maybe real estate, like rental properties and things like that, where it can actually cash flow for you. Then we can start thinking about like residual income, or let's say you write a book or something where you can then earn royalties for decades to come, right? You do the work once, you create a something that has lasting value, and then you sell that over and over and over again. And portfolio income, right? So then we're thinking about, okay, I have stocks, I have investments, I have my money is turning into more money. My money is growing into more money without me literally doing anything. It's completely passive, right? And so it's kind of a, oops, I went backwards. It's like, it's building, it's taking steps forward, taking like, you know, starting to think about this. Okay, how can I turn my cash flow into something that is going to create more cash flow for me or more value for me in the future? 3 things that I think we can consider here is, as a business owner, intellectual property. So that's like writing a book, okay, something that you create that you can sell over and over and over again. Investing in real estate, if that's available for you. So starting to think about, you know, rental income, property income, and then being an investor and looking at the actual, you know, investments in the stock market and various different vehicles that we can invest in where our money can grow into more money. And when we're talking about investing in the stock market, we've got a lot of options. And sometimes it's like, oh my God, where do I even start? Because should I put this money into my RSP, or should I put it into my TFSA, or what is this new thing? It's an FHS, right? And there's a lot of options that we have. So we're obviously short on time as far as like a deep dive into these things. But again, this is something that we can go into one-on-one. You know, depending on your level of income, depending on your goals, short-term, long-term goals, are you saving for your first home, or are you planning for retirement, or what is this, you know, what are you utilizing this money for? We're going to be able to navigate, okay, does it make more sense to build it in RSPs? Does it make more sense to build it in TFSAs? First-time home savers account is a great way to save for your first home. And then we have this other vehicle that I would say most people have never heard about and aren't utilizing. We call it a permanent tax shelter, but essentially using insurance not only as protection, but also as an asset class and as a vehicle where you can build your wealth, a place where you can invest money, have it be tax sheltered, have it grow, get a rate of return, compound and grow over time, and then to be able to actually leverage against the value in that account to buy more assets potentially. And that's the thing that the insurance vehicle, in my mind, is really differentiates that from, say, your RSP or your TFSA, is that you can build value inside of an insurance policy, and you can simultaneously leverage against that value to do something else, like buy a property. So a little bit higher level stuff, but we're starting to get strategic here. And that's where I just get really, really excited, because, you know, when you're making money in your business and you're like, what do I do with this money? Then we've got options, and we can really figure out what makes the most sense for you. And so I want to make sure we have time for this. This is an important topic. I want to hand it back over to you, Ashley. Like, how do you help business owners decide when is the right time to incorporate? What does that look like?
Yeah, that's a question we get all the time, Amy. And thank you, because I feel like I learn so much from you every time I hear you speak. And I have an appointment with Amy on Saturday, because financial planning is not my specialty. I like tax, and so I kind of try to stay in my own lane. And so I'm really excited to be able to tap into your knowledge, Amy. So this is a really good screen. That's a very, very common question, right? The clients come and they're like, Ashley, I need to incorporate my business so that I can deduct more expenses. That's generally how the conversation starts. And then we really get into looking at current state. So does it make sense to incorporate? I mean, there are a few different reasons why you might want to incorporate. There's some asset protection for liability. So your lawyers will be able to speak to you about this in much more, with much more intelligence, I would say. So the lawyer is the right person to talk about some of these other legal sort of considerations. But general asset protection, when you have a company, or your liability is essentially limited to a director's liability, really is what they call it. when you have an incorporated company, you own shares. You own shares in a business. And so, Amy, I think you made a really good point earlier when you said, well, what do I have? Do I have something that I can sell later on in the future? Is this an asset that's going to be part of my legacy? Where is it going? Is it going to my kids? Am I gonna sell it to somebody else? Is there a market for this thing? And so having those shares as an asset actually makes it easier for you to transfer ownership of your business because you don't have all these different assets sort of sitting out here beside you. You've got everything in one nice little package. And then B, it actually allows you to, in certain situations, if you meet certain conditions, access what we call a lifetime capital gains exemption on a future sale or death of those shares. So lifetime capital gains exemption is about $1 million a person, something we all definitely want to make sure we're setting ourselves up to benefit from on a sale or on a transfer to kids. Just a really kind of important thing to think about. And so the other big sort of advantage to incorporation, and this is the one that I focus on, so I try not to let the tax dog wag its tail, but does it make sense to incorporate, and what's the real tax benefit of incorporating? We already know it's not the ability to deduct more expenses in a company. And so really it's this tax deferral that we can achieve in a corporate structure. So this slide is kind of meant to depict that. So our corporate tax rates are such that if we're earning active business in Canada, we're likely paying 11% tax in the corporation on that income. We pay 2 layers of tax. That first layer of tax happens in the company when you earn the income, deduct your expenses, and pay tax on the difference, like Amy discussed earlier. The second layer of tax happens when you personally take the profit that's left sitting in your company out, and you're going to take it out either as employment income or as a dividend. And that's when you get hit with that second layer of tax. So what's the advantage to having a company? Well, the advantage is if you have a bunch of money, or we kind of got to run some numbers in different scenarios, so very client specific. But if you have some money left over at the end of year that you don't need for expenses and you don't need for your personal spending, well, now you have some money in your company that's only been taxed at 11%. So you've got 89% left of your $89 out of your $100 that you can now use for reinvestment into your business. So your purchasing power now inside that company, because you didn't need to take that cash out personally, is just significantly better. So you can grow inside of a company exponentially quicker should you have that sort of ability to leave cash in there at the end of the year. And so any questions on that, because it is a little bit confusing, but Amy, the stuff you just went through us with us just flows really nicely into this discussion, because a starting point is you kind of need to know what your income and expenses are over the year. You need to be able to track your living costs and things like that to really determine whether or not it makes sense to incorporate a business. Don't forget, you've got annual filing. So you've got to file a corporate tax return every year, and your lawyer has to file an annual filing for you. So if we're talking about $3,000 just to maintain this structure, well, are you saving $3,000 in tax such that it warrants setting this structure up in the first place? So lots of different, I think, considerations and lots of moving parts, but definitely talk to your accountant. And if you can give them an idea of what your revenue, expenses, personal spending looks like, that conversation is just going to be so much easier.
I'm curious actually, because I thought I was under the impression that the corporate tax rate was actually 12.5%. So did this just change recently?
I think it was, I want to say it was 2018, 2019.
Okay.
Yeah.
Awesome. Well, that's even better, because I've been telling people you pay 12.5% of your corp and we can help, blah, blah, blah. But okay, I'll update the verbiage.
There weren't any changes to our 2024 rates as part of our 2023 federal budget. So these will be the same rates that we have carrying forward into next year. Our top personal tax rate at 53.5% is really the reason why, if you have cash left in your company, leave it there, because otherwise you're going to be paying tax, a whole bunch of it, in the very top tax bracket. And that's probably not what we want to have you doing. There's probably a better way to do that.
Yeah.
The other thing I really wanted to mention is, okay, so it's time to incorporate. Well, what does that look like? Because it could look very different depending on what you have there. What does your business look like? Is it something you can sell in the future? Do you want to have access to that lifetime capital gains exemption? Is it something that you're passing on to your children? Does it make sense to have a family trust? Maybe you should hold these shares directly. Maybe you should have a holding company. And so there's just a whole bunch of different considerations that I think warrant having that discussion with your accountant. Because it factors into your estate and legacy planning and everything else. And there's a whole bunch of different things that we can do in that context. So I wanted to mention a couple things, Amy. I know we're like just flat
I
out of
know. I'm
time.
like, we should have planned 90 minutes for this. There's like way too much to cover in an hour, but I know some people have had to leave. I'm totally fine to keep going until like quarter after at least. And if you're good to stay on, yeah, I know you want to touch on GST and a few other things. I don't have a slide for that, but please dive in and share. That's awesome.
Yeah, and these were just a couple of little things, and I'm good until definitely quarter after. So if anybody has questions or wants to stick around, because we went through this part pretty quickly, but I think one thing to just flag for our self-employed business owners is GST, because I think that's just something that falls through the cracks, right? If you are a self-employed individual earning that contracting, consulting, whatever kind of income it is, once you hit that $30,000 threshold, now you're subject to GST. I think, like you mentioned, Amy, starting a business, there's just all these different moving parts, and we're learning as we go. And so I also wanted to mention the Canada Revenue Agency's voluntary disclosure program, because I think I've had a number of clients that, they're 2 years into they're really good at what they do. They're 2 years into operating their business. They've been significantly profitable, and they come to me and they're overdue on tax filings. And so the CRA has this voluntary disclosures program where, as long as they haven't demanded you to file returns, and this program is available for both GST and for income tax, as long as they haven't demanded you to file, you can actually voluntarily disclose your overdue tax filings, and you'll get hopefully some relief from interest and penalties for getting yourself up to date. So that's just something I think is pretty important to know about.
Absolutely. Yeah. Very valuable. Yeah. And I think we can, for future classes, if we're going to do this again, we'll add in some more info about GST. I forget about it honestly, because I'm kind of blessed in my industry, because the way I'm paid, I don't have to worry about GST. But I know that's a big thing for so many small business owners, is like, yes, at what point do you need to get a GST number? And then what do you do with that? And then how do you track it and all that? Yeah. So, yeah, there's been so much to talk about here. We'll just kind of wrap it up, and then we'll just stop the recording and people can ask some questions. We'll stay on for a little bit longer, but the kind of overall theme, and really just what I wanted to leave everybody with, was the idea of like, there's kind of these three moving parts here. There's like making money in your business, making sure you're profitable, make sure there's cash flow there. If that's a struggle still, then maybe you need some support in the realm of like business coaching, or something that's going to help the engine of your business fire up and be more profitable. Or maybe you're like me and you were just in the wrong business and you needed to change careers, and now I'm in the business that has the firepower and the horsepower. Maybe it is also a matter of getting really clear on your cash flow, your income, your expenses. How can you earn more income and have less expenses to make sure that equation is in your favor? And then how do we grow our money? So like, let's consider the fact that above and beyond growing a successful business, and hopefully that's an asset in and of itself, how can we diversify? How can we make sure that we have money in different places, that we have different sources of income, different assets that are working for us behind the scenes, so that if something happens, we're not just all of a sudden scrambling. We're going to grow our money and our assets, both for a backup plan, but also for our future, and to be able to eventually be able to stop working. And then protecting our money and making sure we have a legacy plan, making sure that we're not just growing wealth, but sheltering it. Because as you know, Ashley, taxes are one of the biggest, there's only a couple of things in life that are certain, death and taxes. And there's actually a way that you can optimize both and it relates to life insurance. So talk to us later, but truly, like, what is your legacy plan? What is your, how do you want to grow the wealth that you grow? And then what do you want to do with that who is it going to? Who's it going to pass forward to? And how is that going to look? So lots to think about. Before I open it up for questions, I just want to share, our contact information here. Hopefully people can see it okay. So Ashley is here at a firm in Victoria. Best way to reach you, Ashley, is your email there, I think, so people can jot that down. And if you don't have an accountant that you like, perhaps you want to sit down and have a discussion with Ashley to see if that would be a good fit. Myself, my contact information is on there too. That is my cell phone number. You can call or text me. Calendly.com with my name is going to give you an option to book a private call with me, or my email there. Also, there's other agents on this call. So if you were invited here by someone else aside from me, then please get in touch with whomever did invite you, because we do have some other financial brokers that are participating in this. They can help you do all the same things that I've talked about. And last but not least, I just want to mention our class next week is it is going to be focusing more on when you are incorporated, and then what can we do inside that corporation and legacy planning and things like that. And so that is next Wednesday at the same time. And when I send out this recording, I'll make sure to put the link in there for anyone who wants to register. So I'm going to just stop recording. And then if anybody does want to come off